investors. Again, you cannot take away the industrial goods. The industrial goods is also an attractive sector. We have very few companies in the industrial goods sector at the moment, but yes, it's still very attractive for a number of foreign investors. Oil and gas is the last one that I want to talk about. The challenges in the oil and gas sector in recent times have made it a little bit less attractive, but you still talk to a number of foreign investors, and they're still trying to ask you a number of questions around these companies. Forte Oil, Oando, Seplat, as you mentioned, are a few of the names that you always hear people ask you questions around.
Let's look at the flip side of that. I'm sure that's the natural question I'm going to ask you about the local investors, in particular retail investors who are non-portfolio big-time holders, PFAs, insurance, and the rest. Where's the buying sentiment as far as local investors, retail investors are concerned, who think, well, I'm hell bent on equities. I'm not going anywhere, even though the market has punished me perhaps unfairly in the past, but I'm sticking with equities. Where is their buying sentiment?
For the retail investors, particularly the PFAs and maybe the insurance company and some of the other mutual funds that you probably see around. Nigerian investors are very cautious. A number of, particularly PFAs, a number of them have been burned in the past from the poor performance in the equity market. So what you actually see from them is that a lot of them are very risk averse, and a number of times they always want to talk about the quality names. So you're talking to them about the banking sector. Most of them are just usually interested in the tier 1 names because in terms of risk and return, the tier 1 names have better returns over the last, you can look at the last 5-10 years. They've actually posted better returns, and also in terms of risk, they have lower risk. So it's a no-brainer that a number of these local investors like those stocks. They also like a number of consumer names, and naturally because of the kind of defensive structure they have, they are known as defensive stocks. So they like to put the money in defensive stock. The driver for their sentiment is their risk tolerance level, willingness and ability to take risk. I strongly believe that the PFA have huge ability to take risk, given the population of Nigeria and the fact that we are very skewed to our age. Our age bracket is very skewed towards the younger segment. So I think they have a huge ability to take risk, but willingness to take risk is very low. So they always try to be cautious and stay around the top tier names.
So you folks at Vertiva, you're going to see folks doing a bit of defensive stocks, but of course some folks want the offensive stocks, if you want to put it that way, stocks that I buy on Monday, I'm selling off on Thursday, and I'm home and dry on Friday. So give us your key earnings outlook from your team at Vertiva Capital Management. What sectors or subsectors are you looking at as the new earnings are coming through, and why do you think these earnings are very crucial for the companies or the stocks under your universe?
Okay, in terms of earnings outlook, again, it's always very difficult to talk about earnings in the Nigerian market and not talk about the banking sector. The banking sector always, stands out for earnings and will continue to stand out, particularly in Q2 17. When you look at Q1 17 numbers were strong. In fact, as against what a lot of people might think, 2017, most of the banks that we cover, particularly the tier 1 name, GT, Zenith, Access, UBA, they actually posted record high profits. So when I say record high profit, that's the highest profit they've reported ever since they were listed or since they started operation. So it tells you how strong earnings were last season for some of these stocks. And a number of this was supported by the currency devaluation we saw at the end of H1, where non-interest income was very strong as a result of revaluation gains. For 2017, they've also started on the strong foot. You look at Q1 numbers, Q1 17 numbers was very strong, and we expect that Q2 numbers also will be relatively strong. So when you say earnings prospect, I always pitch the banking sector, the top tier names. The expectation is that we're likely going to see dividend declaration from GT, Zenith, Access, UBA, and this is actually going to be good for trading sentiment. We know that Nigerian investors typically like quick return on their investment, so they favor dividend-paying stocks. Banking sector is a dividend-paying sector with an average dividend yield of between 8 and 12%. Sometime last year, we saw dividend yield as high as 15% from a couple of the banking stocks. So yes, it's a sector to look at. The consumer good name is also somewhere to look at. We've seen demand across the consumer space increase significantly in the last few months. Last year, what we saw was that a lot of them actually took in price increases. We saw price increases as high as 27% across most of the names we cover, and that affected volumes. But one good thing we have seen this year is that volumes have come in stronger, and with stronger volumes, we have actually, and still relatively high prices, we have actually seen stronger revenue. A number of them are also cutting back in terms of their cost. We've seen marketing costs reduce significantly across most of the names, which has in turn improved the bottom line. FX was a big challenge for 2016, and with 2017, we've seen a more stable FX market. What this is doing, or what this will continue to do, is to support bottom line. So I look at that sector, and I think that we're in for a good result. The industrial is also another one to look at. Dangote, WAPCO, we expect them to do well in Q2. A big challenge for them last year was energy supply. Energy supply was weak, and actually we saw increase in their energy cost. So we've seen better energy mix in recent times, and we expect that would actually also support bottom line, in conjunction with better demand from better public sector demand for cement, as the federal government continues to look at a lot of infrastructure projects.
Olalekan, thank you so much for your time. Olalekan Olabode, Head of Research at Vetiver Capital Management. Of course, the numbers, when the numbers are out, are all in full force as you analyzing them, giving us expectations and outlook. We're going to get you back here to talk us through that. That's very interesting conversation around the sectors and the stocks across what the Vetiver Capital Management team thinks about these numbers as we're expecting them to hit the streets. Let's go back to you after the break.